So in this video, I want to go over a session review of today's price action Monday, November 13th, and what my personal approach was heading into this session. Now, full disclosure, my risk management today was very poor. I'm actually red on the day. However, my bias and my personal lean was correct. And so I want to walk you through right now what my bias and what my train of thought was and why I had a bullish bias heading into today's session. So as we know on Friday, heading into Monday session, obviously we want to look at Fridays. Heading into Friday, we all know it was a big short squeeze rally to the upside, and buyers reclaimed the big 4,400 level in their favor. Okay, we see the strong breakout right through 4,400. That's great. So looking at Friday's profile, we can see there's some value areas that we can see up at higher prices, and there's some value areas at lower prices. And obviously in between these value areas, there are some volume gaps. Okay, so volume gaps will act as magnets for price to essentially glide right through. There will be little to no resistance. So during Friday's session here, we have this 15-minute demand zone form. Now, if we extend this demand zone to the left, look where this demand zone is encompassing, a value area. So this is a high probability demand zone, and this is what I look for when charting my supply and demand zones. Okay, if there is a value area that lines up well with my demand zone, in this case it's a demand zone, same rules can apply for a supply zone. If there's a value area at the same area on the chart as there is the actual zone, that's a high probability zone, because clearly there was interest when there was interest by smart money, by big money, by traders in general when price was last trading here. So we see the value area that is here. Okay, now what kind of price action is there? Well, we see a little bit of consolidation. We see a low volume pullback to the downside, and then we see a sharp move higher, right? Look at the next two 15-minute candles. We see a sharp move higher, and the breakout comes on volume. So we knew buyers were active in this area. This is an area of interest where I want to explore long positions. Now, and context is very important. Where does this demand zone form? Well, one, it's right above a volume gap. Okay, volume gaps, when price is trading above volume gaps, buyers are going to want to defend the volume gap. Okay, you will sometimes see price trade to the very edges of this value area, and it'll wick into the volume gap as essentially as a stop hunt for buyers, and also to trap short traders thinking there's going to be a breakdown before price quickly reverses inside this value area, and then price will trade higher again. Okay, so buyers are going to want to defend this value area with everything they've got. Otherwise, price moves lower and then buyers lose. Okay, buyers want to stay in control of the trend. So let's go ahead and play this through now that I walked you through my thought process here. And let's see if I'm going to increase the speed. No, we'll stick with this current speed. So as we can see, during Globex, price actually dropped into demand for a little bit before bouncing out of it. And notice buyers defended demand the whole time overnight. And we're getting close to our first test of demand, or excuse me, our second test. All right, and so I'm going to stop it on the first 15-minute candle of the day. Okay, so we can see buyers tried here at the opening drive. Ultimately, sellers were in control. So when this first 15-minute candle closes, notice where this candle is trading. It's inside of demand. Okay, this is exactly how the overnight test went. Price dropped into this demand zone. Now, granted, it is a pretty large demand zone. Okay, let's see an exact measurement here. It's about 6 points wide. Okay, that's a pretty big demand zone. So we have to give ourselves leeway here. If we're going to be exploring long positions, we have to use bigger stops. Okay, obviously, if it was like a 3 to 4 point wide demand zone, we could use tighter stops. But buyers were active all the way at lower prices down here at 44.06. So we have to be more liberal with our stop losses, and we have to give ourselves more room for error to let price do what it's got to do, let buyers get in control, and to accumulate their long positions before there is a reversal higher. So let's keep going. Let's see what the next candle is going to look like. And we can finally see there was another new low, but look where this low comes in. It does not break this demand zone. Okay, buyers defended this demand zone, and we can see prices already beginning to push higher 30 minutes into the trading session. Let's see what the next couple candles look like here. Buyers are still trying. Notice price is still trading inside the demand zone. And we can now see we're seeing a series of higher lows being put in place on the 3 15-minute candles. Now, I will say the volume is concerning here at this point, but price action is king. Nothing tops price action. Price is making a series of higher lows on the 15-minute time frame, and buyers are defending demand. And keep in mind, this is a high probability demand zone, which is what I said in the beginning. Okay, we have the previous value area established on Friday's session. Now notice what is also happening on Monday's session. Value is building here again at lower prices around the 4410 level and above the key psych level of 4400. You can see the value area building here as I continue this replay mode and as we continue to look at Monday's morning. As we wait for the next candle to come into play, we see another fresh high. We see another high. Finally, we see the big move higher as price is now clearing pre-market highs. So let's examine what price did here on Monday morning. So we have a few key levels to look at. We have overnight lows. This can essentially be looked at as a liquidity grab by smart money. Now, what they're doing is when I say a liquidity grab, they're going to hit stops on long traders who are using this low wick right here as a stop loss. Notice the breakdown in price. Let me get an arrow tool. Notice the breakdown right here. Okay, that breakdown below Globex lows is going to hit the stops of traders who are long, essentially dip buyers. And they are now stopped out of their position, and they're using that liquidity as basically fuel for the reversal higher. Okay, now this was not a clean-cut reversal. Okay, it looks pretty clean on the 15-minute time frame, but if you were to break this down to the 5-minute, 3-minute, or 1-minute, you're going to see a lot of messy action down here on lower time frames. You're going to see a lot of upper wicks, and you're going to see a lot of lower wicks because traders were getting stopped out in real time this morning as smart money was continuing to build their long position. Okay, this right here is the accumulation action of buyers. That is all this is. Okay, buyers were defending demand. We see the liquidity grab below below Globex lows. Did demand ever break? No, it did not. So I cannot stress that enough. Demand never broke, which ends right here at 4406. So there was never a reason to be short. Now, as far as upside targets go, how do we gauge our long targets here when we look at demand zones? Well, it's really simple. We're going to use pre-market high as 1. Okay, here's our first upside target. And then we can also use Friday's point of control, which is 44.32 it looks like. And we can also use Friday's high of day, which looks like it's coming out to 44.35. Okay, and let's see if price ever meets these targets here after bottoming in demand, or do we get a move lower? And does demand eventually break? So I want to take note of that here. Initially, when pre-market highs are taken out, new sell orders are filled. You can use that as a scalping short setup, if you will, but notice sellers are not very strong right here. Okay? Yes, there was a dip lower, and it was a decent-sized dip of a few points, but look where this 15-minute candle closes. It closes well above pre-market highs. Buyers are 100% in control, and there's only been one red 15-minute candle through the entire cash session. And where did that candle come? 15-minute demand zone that formed on Friday. There's still, unless you were scalping right here, once pre-market highs broke, there has not been a high probability short signal. And once this 15-minute candle closes above pre-market highs, you can pivot to Friday's point of control, which has also been met at this 11:30 a.m. 15-minute candle. And now we're looking at Friday's highs as the overall upside target. And let's see if that target is indeed going to be met. And it is. 15 minutes by 11:45 a.m. Eastern, 2 upside targets were hit. Okay, all in all, this was a great session by buyers. And the conviction to be long today was really simple. And I shared this with my team well before the move happened. I think I shared it around 8 a.m. Eastern in the Discord server. So like well before cash open or the cash session began, excuse me. this was, if you were successful today and you were able to capitalize on this demand zone, it was because you were approaching from an objective point of view and you were not biased to the downside. Okay, if you inflict a personal bias on yourself, you're asking for pain as a trader. You're asking for emotional pain, and you cannot do that to yourself. Okay? Did demand ever break? The answer is no. There was no acceptance right here. This black box right here represents the volume gap to the downside. There's no action at all inside this value gap. This volume gap, excuse me. I said value gap. It is a volume gap. There's no acceptance at all inside the volume gap. Demand never broke, and I said you had to be loose and more liberal with your stops. Now, 6-point stop loss is pretty big. The biggest that I ever go is 5 points. So, we actually would have been stopped out on the initial entry, but price kept confirming that buyers were active in demand. So you could have re-entered, and you eventually would have been green on this day at some point with the higher highs being put in place. Okay, now my issue today was I was using too tight of stops, and I was jumping the gun. Like, I was anxious to get into this trade because I had a high feeling, or like my intuition was telling me that this was going to hold, but I jumped the gun and I was a few points too early because initially I thought, you know what, we're going to have a really sharp reaction off of this demand zone, so I'll be okay. But no, price ended up trading well inside the demand zone, and I was stopped out. And I put myself in a little bit too big of a hole, hit my daily stop loss limit, so I couldn't really keep trading on the day without breaking my rules. So it's best that I just not trade the rest of the day. But my personal lean was correct. So if you have any questions about how my approach was to Monday's session, if you have any questions regarding how I found the demand zone or any of the lingo that I used or my breakdown, feel free to leave it in the comments below, or you can DM me directly on Instagram or Discord, and I will be more than happy to answer any questions that you have. And I hope you did find value in this video. And if you have any questions, excuse me, I already said that. And if you enjoyed this video, please feel free to like and subscribe. Take care.